Now guys, we are going to explain the differences between trading and investing, right? So say you want to invest. When you are investing, you are buying shares. Let's say you want to buy stocks or you want to buy shares. You actually buy ownership of a company. I won't go deep in that because it's a course on its own. But what you need to understand is that by the moment you buy a share, you actually own that company. You own part of that company, even if you have 0.001% of shares, right? Which most likely it's very rare to even have that amount, but the fact is you own part of that company, and that company will not do anything without telling you what they are going to implement. That is why if you have shares that you have bought, you will see that you're often going to get emails from that company informing you of what is happening because you are one of the owners of the company. Now, the difference between investing and trading is that in trading, even if you are trading the stocks, which is the companies, you do not buy to own, you buy to speculate. It means that you only make money on your speculation whether the market is going to go high or whether it's going to go low. Because remember, we want to buy if it's going high and we want to sell if it's going low. So you only make in trading, you only make money based on speculation, and in investing, you make money based on ownership of shares. That is the major difference between the two. So there are type of traders, right? There are different types of traders. There are scalpers, there are intraday traders, there are short-term traders, there are swing traders, and there are position traders. The examples are based on how long do these people hold their trades or their opened trades or their opened positions. So that's what separates them. If you trade anything from a few minutes to a day, then you are trading in between being a scalper, being an intraday trader, and also being a short-term trader. But if you are trading anything that is over a week, then you are somewhere between a swing trader and a position trader, right? So when you are trading, it's very important to note that currencies are traded in pairs, right? So I will make an example. If you want to trade Forex, you will not trade a currency alone as it is. You are going to trade it compared or versus another. So if you are to trade, for example, you want to trade the Great Britain pound versus the US dollar. You're going to trade what we call GBP USD. So it means it is Great Britain pound versus the US dollar, right? What you need to note right now in your books or in your notebook is that the one that comes first in the pair, which means GBP USD is a pair because it is both those currencies, right? The one that comes first in that pair is called the base currency. The one that comes second is called the quote currency. So it means we are quoting the base. We are quoting how many of the quote currencies go into the base. I'll make an example again with USD ZAR. The ZAR is the Zuid Afrikaanse Rand. It's supposed to be called the South African Rands, but it is still called the Zuid Afrikaanse Rand because remember we were colonized by the Dutch. But then I don't want to go there, right? Now, we said earlier, if you were to exchange your dollars or your rands for your dollars, you were going to exchange them at 15 rands per dollar. So now it means that is the exchange rate now, 15 rands per dollar, right? On that pair, which is called the USD ZAR, it means for every $1, which is the dollar is the base currency, for every $1, there are 15 rands. Also in an example, if maybe the exchange rate between the GBP and the USD was 1.053, for example, then it means for every 1 Great Britain pound, which is the base currency, there are 1,003 US dollars. That is now the difference between the base and the code currency. And that is how we explain what the Forex pair is, or the currency pair is.